Hey everyone, and welcome back to the channel. Today, we're diving into a topic that so many people overlook. You see this idea that you need a mountain of cash to start investing and making money. But what if I told you that's completely wrong? You can start building wealth with just a small amount of money. And today, I'm going to show you 10 smart ways to do exactly that. These are strategies that most people just walk right past, but they could be your ticket to financial growth. So grab a notebook, get comfortable, and let's get started on turning your small change into a serious portfolio. First up, let's talk about something you've probably heard of but maybe haven't tried: micro-investing apps. Think of apps like Acorns or Stash. These platforms are designed for beginners. The concept is simple. They round up your everyday purchases to the nearest dollar and invest the spare change for you. You buy a coffee for $2.75, and the app automatically invests that extra 25 cents. It sounds like pennies, right? But over a year, this adds up to hundreds of dollars being invested without you even feeling it. It's the definition of set it and forget it investing, and it's a brilliant way to get your feet wet in the market with literally your pocket change. You're building an investing habit without any of the stress. Number 2 is a classic for a reason: dividend stocks. Now, don't get intimidated by the term. A dividend is just a small portion of a company's profits that they pay out to their shareholders. So, by owning a stock that pays dividends, you're getting a regular cash payout, kind of like earning interest in a savings account, but often with a much higher return. You can then take those dividends and automatically reinvest them to buy more shares of the same stock. This is called a DRIP, or dividend reinvestment plan. It creates a snowball effect. Your small initial investment starts generating income, which then buys more income-generating assets. Over time, this compounding can turn a modest investment into a significant source of passive income. Coming in at number 3, high-yield savings accounts and certificates of deposit, or CDIS. Okay, I know what you're thinking. Savings accounts, that's not really investing. But hear me out. For money you can't afford to risk, like your emergency fund, a high-yield savings account is a fantastic, safe place to grow it. They offer interest rates much higher than your typical brick-and-mortar bank. While it won't make you rich overnight, it protects your money from inflation and ensures your cash is working for you, not just sitting there. CDs are similar, but you lock your money away for a set term, usually for an even higher interest rate. It's a foundational step that provides stability for your riskier investments. Let's move on to number 4. Something that has exploded in popularity: fractional shares. In the past, if you wanted to buy a share of a big-name company like Amazon or Google, you needed thousands of dollars for a single share. That was a huge barrier for small investors. But now, thanks to brokers like Fidelity, Charles Schwab, and Robinhood, you can buy a small piece, a fraction of a share. You can invest just $5 or $10 and own a slice of your favorite company. This allows you to diversify your portfolio with very little money, spreading your risk across many different big-name companies instead of putting all your eggs in one basket. It's a complete game changer for building a diversified portfolio on a budget. Number 5 is peer-to-peer lending, also known as P2P lending. This is a really interesting one. Essentially, you become the bank. Platforms like Prosper and Lending Club connect people who want to borrow money with people who want to invest money that's you. You can lend small amounts of money, say $25, to multiple different borrowers. As they pay back their loans with interest, you earn a return. Of course, there's a risk that a borrower might default, but by spreading your investment across many different loans, you can significantly minimize that risk. It offers potentially high returns compared to traditional savings, and it's a way to directly participate in the lending economy. At number 6, we have REITs, which stands for Real Estate Investment Trusts. Have you always dreamed of investing in real estate but don't have the cash for a down payment on a property? REITs are your answer. These are companies that own and operate income-producing real estate, like apartment buildings, shopping malls, or office towers. When you buy a share in a REIT, you're essentially becoming a landlord without any of the headaches of managing a property. They are legally required to pay out at least 90% of their taxable income to shareholders as dividends. So, just like dividend stocks, they can be a fantastic source of passive income. You can buy shares of REITs just like any other stock through a regular brokerage account. Number 7 on our list is investing in yourself through education. This might be the most valuable investment you ever make, and it's one that people consistently ignore. I'm not just talking about a formal college degree. This could be buying a $10 book on a new skill, taking a $50 online course in coding or digital marketing, or attending a local workshop. The knowledge and skills you gain can directly translate into a higher income, a side hustle, or a better job. The return on investment for education can be infinite. It is an asset that no one can ever take away from you, and it compounds over your entire lifetime. Never underestimate the power of learning a new, profitable skill. Next up, number 8, low-cost index funds and ETFs. This is my personal favorite for beginners. An index fund is a type of mutual fund that holds stocks from a particular market index, like the S&P 500, which is made up of the 500 largest companies in the U.S. An ETF, or exchange-traded fund, is very similar. By buying a single share of an S&P 500 index fund, you instantly become diversified across 500 different companies. It's the ultimate don't put all your eggs in one basket strategy. These funds are passively managed, which means their fees are incredibly low, so more of your money stays invested and working for you. It's a proven, long-term strategy for wealth building that even legendary investor Warren Buffett recommends for most people. For number 9, let's get a little creative, flipping or selling. This is a hands-on way to turn a small amount of money into a larger one very quickly. The idea is simple. You buy undervalued items and sell them for a profit. You could start by visiting thrift stores, garage sales, or browsing online marketplaces for items you can clean up and resell. Maybe it's vintage clothing, furniture, or collectible electronics. You might start with just $50, buy a few items, flip them for $100, and then reinvest that $100 to buy more inventory. It takes effort and a good eye, but it's an active way to multiply your initial capital and can even be turned into a fun and profitable side business. Finally, number 10 is to start a small, low-cost side hustle. Think about the skills you already have. Are you good at writing, graphic design, social media, or even just organizing things? You can offer these skills as a service on platforms like Fiverr or Upwork. The initial investment is often just your time. You could start a blog, a YouTube channel, or a podcast about a topic you're passionate about. While these might take time to generate income, the startup costs are minimal, and the potential for growth is huge. A successful side hustle can provide an extra stream of income that you can then use to supercharge all the other investment strategies we've talked about today. It's about creating your own opportunities. So there you have it, 10 smart, accessible ways to start profiting from small investments. The key takeaway is to just start. Don't wait until you have thousands of dollars. Whether it's $5 into a fractional share or $50 into a side hustle, the most important step is the first one. Let the power of compounding work its magic over time. Consistency is far more important than the amount you start with. I hope you found this breakdown helpful and feel more empowered to take control of your financial future. Which of these methods are you most excited to try? Let me know down in the comments below. I love reading your thoughts and experiences. If you got value from this video, please give it a thumbs up and don't forget to subscribe to the channel and hit that notification bell so you don't miss our future videos. Thanks for watching, and I'll see you in the next one.